Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, China's latest AI breakthrough shaking up the industry. What Moonshot's Kimi K3 means for the race with OpenAI, Anthropic, and the chip makers powering it. Plus, SpaceX gears up for a second attempt at a Starship test flight later this week. The stock's underperforming most of the other big NASDAQ IPOs. And Andreessen Horowitz signed defense investor and military vet Connor Love to the firm's American Dynamism team. Love joins the show. Good morning from San Francisco. The surprise release of Kimi K3 from China's Moonshot, it's still everything that people are talking about, reading about. We are rebounding in technology stocks modestly. We're off session highs where we opened earlier. Remember, chip stocks entered a bear market Friday in part because of all of the questions posed by what Kimi K3, a 2.8 trillion parameter model, represents. Some of those were like, well, if we have more efficient AI, do we need to spend as much on compute? Nvidia is an example of a name that's rebounding. A lot of focus has also shifted to the intense memory requirements for what is happening in open-weighted models. Moonshot's gone from AI upstart to global contender almost overnight. Kimi K3 drawing praise for rivaling the best models from OpenAI and Anthropic, but demand has been so strong that the company says it's temporarily limiting new subscriptions as it adds to works to add more capacity. Bloomberg's executive editor for Asia Tech, Peter Elstrom's with us from DC. There are so many reports on the Bloomberg this morning, so many places we could start. But I want to go to one of the pieces that the team did about, okay, it's Monday morning. We probably went into the weekend thinking, oh no, we don't need to spend as much on compute, hardware in that context. Now we have a piece on the Bloomberg saying this puts a lot of emphasis on memory. What's the team in Asia writing about?
Well, yeah, let's broaden out the lens a little bit here. What's going on is China is holding this World AI Conference in Shanghai, and we're seeing their companies come forward with new offerings in all sorts of different areas. Moonshot is certainly the one that got the most attention over the weekend. We saw this company that was probably not that well known outside of China, if at all. And all of a sudden, people are paying attention to it. As you mentioned, its performance is very close to the frontier models. 2.8 trillion parameters, essentially, you know, the synapses of this, the brain synapses of this model are very significant. But also you saw Alibaba come out with a new version of their Gwen model that is very close behind. It's 2.4 trillion parameters. It's a very powerful model, too. So I think the big lesson, the big takeaway here, that China AI is much closer behind the U.S. in terms of AI capabilities than we really realized. If you thought China was 6 to 12 months behind before, now it looks like maybe they're only a couple of months behind. They're catching up quite quickly, and it's a broader selection of competitors than we really anticipated. People have been focusing mostly on DeepSeek in particular, maybe a little bit on Alibaba, and then a couple of the smaller models. But now we're seeing companies like Moonshot come forward, and they're very competitive, and a lot of people didn't even realize that they were going to be in this race.
There's some really important Bloomberg reporting on what Moonshot's looking at financially. We're going to get to that with Bloomberg's Bailey Lipschultz in just a moment. But away from sort of the numbers, what do we know about the people behind Moonshot? Like, what do we actually know about this startup and its team that have been just thrust into the limelight in such a quick and short space of time?
Well, the founder of Moonshot is a 33-year-old Yang Jilin. He graduated from Carnegie Mellon. He got his degree in the United States. He decided to go back to China because of the possibilities that they had there. And really, before DeepSeek, he was kind of seen as the rising star within the AI universe. He's a big music fan. He named the company in Chinese after Dark Side of the Moon, the Pink Floyd album, which apparently is his favorite. They have conference rooms. But beyond being this geek and this music fan at the same time, he's been at kind of the cutting edge of AI developments there. And he made a very conscious choice. Rather than trying to make a lean, efficient model, he decided to go very big with this version of Kimi 3, and try to make something that was very close to the frontier edge that we're seeing in the U.S. So I think Yang is somebody that we're going to hear more about, the same way that we talk about DeepSeek's founder, Leon, I think we're going to see more breakthroughs, more innovations, and people are going to start watching him much more closely than we've seen in the past. We had a nice scoop over the weekend also that Moonshot is planning on going public. So we're going to be able to look at the financials of their company in the way that we've seen some of the other Chinese AI models. And by the way, we haven't seen that from the U.S. players so far.
A lot of key figures critical to the Bloomberg Tech audience just kind of remarked over the weekend that this could have been an American startup. You know, there's a lot of focus on the US's own policy with regards to talent immigration. We'll get to all of that later in the program. Bloomberg's Peter Elstrom, thank you very much. We'll stay with Moonshot. Peter just mentioned it. The company isn't just making waves with its latest AI model. It's now setting its sights on the public markets. The startup is said to be preparing for a Hong Kong IPO that could come in the next 6 months, following an absolute surge in demand. Its valuation above $30 billion right now, according to sources. Bloomberg's Bailey Lipschultz, all things IPO. It was so interesting to read through this one. Let's start with the basics. What are we reporting? What do we know about how quickly they're moving to do a Hong Kong listing, and any of the sort of valuation considerations around that?
Yeah, Ed, you kind of nailed it on the head with the intro. So closing up around right now about $30 billion. Again, a small drop in the bucket relative to what we've been reporting around the Anthropics and OpenAIs of the world here in the U.S. And the expectation that in the next 6 months they could be pricing that IPO in Hong Kong. The main thing to keep in mind, Bloomberg has reported that DeepSeek is looking at a mainland listing sometime in 2027. So these two now premier companies in Asia, in China, could actually be racing to go public. Kind of similar to what we're seeing with Anthropic and OpenAI. But again, mainland China versus Hong Kong versus U.S. listings open up completely different investing universes.
So go into that in a little bit more detail. I find that really interesting, right? A big part of the story over the weekend is that this is a Chinese AI startup, right? We're saying they're looking at Hong Kong as a listing. What are the kind of political considerations around that as opposed to the US? Where do the pools of capital tend to come from if you do an HK listing?
HK listing opens up an entirely different investing universe. So you have the rest of really all of Asia. So you think about Hong Kong-based investors. You think about people in Australia and Singapore and other really countries that could tap that listing. Again, U.S. investors sometimes do invest in Hong Kong, but similar story to what we tracked with SK Hynix. It's a bit of a higher bar to clear, and there had been some consternation around that. Whereas on the flip side, a DeepSeek listing in mainland China, completely different investing universe. It's a really kind of local-driven investing community. You do have retail numbers that are kind of eye-popping. It looks a bit kind of like gambling and trying to get in on some of those options. So the big push, and actually the big news, is the fact that Moonshot wants to tap the HK market, just again because that does open an entirely different investing universe and would kind of open it up more similarly to an Alibaba or some of those other companies, JD.com, that are listed in Hong Kong and also listed here in the U.S.
Bloomberg's Bailey Lipschultz, thank you very much indeed. And competition among Chinese AI developers also continues to intensify. Alibaba just unveiled its latest flagship Qwen model, which it says is second only to Anthropic's latest system, which sent Hong Kong shares of Alibaba rising on that news. The Sunday release came only days, of course, after Moonshot unveiled its latest K3 model. We have some breaking news crossing the terminal in the last few minutes. UK's Rachel Reeves has resigned as Chancellor of the Exchequer. In a post on X, she says it's been, quote, the privilege of my life to serve as the Chancellor of the Exchequer, the UK's equivalent of a finance minister or Treasury Secretary. You can see there was an immediate response in the pound dropping against the dollar, 134, where it currently stands. Meanwhile, new Prime Minister Andy Burnham just told reporters the Labour government will use, quote, any flexibility within its fiscal rules. He said he would stick to the self-imposed rules, which were adjusted by Rachel Reeves 2 years ago to allow for greater capital spending. It's a dynamic situation in the UK government. We'll keep you up to date as things change. Coming up, the countdown's back on. SpaceX targets Thursday for another attempt for Starship's 13th test flight. We've got more on that next. This is Bloomberg Tech. SpaceX is gearing up for another attempt at a 13th Starship test flight. The company has set Thursday as the new launch date after last week's attempt was scrubbed, and right at the last moment. Shares were down about 1.5%. This has been a broader story post-IPO on SpaceX, kind of underperforming. For more on SpaceX, Brett Lindsay, Missouri Managing Director and Head of Industrial Sector Research, joins us. Recently initiated on SpaceX, has an outperform rating with the stock a price target of $200 per share. You know, Brett, I appreciate that there's a clear thesis at the core of your coverage of SpaceX, right? But I wanted to get to the idea that I'm sat here at this desk during the Starship attempt last week, and it was amazing to see how quickly in after-hours trading the stock dropped, right, 4% in the moment because the test was aborted right at the final moments. All of these future business lines on the AI side, Neo Cloud side, Starlink, orbital data center, they're all predicated on Starship not just working, but being rapidly reusable. So could we just start there and sort of your response to tracking the cadence of Starship's development?
Yeah, you bet. Thanks for having me on. So yeah, this was flight 13, recent delay. Was some minor technical issues that were identified pre-launch. And I remind you, this is version 3, so it is a bigger, more powerful vehicle. They've debuted it about 2 months ago. The automatic abort at ignition was really the function of 4 of the 33 Raptor engines on the booster didn't immediately light up, and the onboard system caught it. It stood the vehicle down before the liftoff, and that's a safety system really doing what it's supposed to do. Musk in the team, they've identified the root cause within a few hours. 2 engines are being swapped out. They're already back on the pad. They're targeting, as you mentioned, this Thursday for a relaunch. That's about a week of turnaround on a pretty complex rocket. I think these development programs that you've seen historically at this scale, from a diagnose and fix cycle, that's relatively quick versus anything that's structurally wrong with the ship.
So Brett, here's the thing. I'm reading your research. Investment thesis: SpaceX is not a rocket company. We're just talking about rockets. Explain your thesis.
Yeah, no, absolutely. I would say that the enabler of the Starlink opportunity and the connectivity opportunity longer term is going to be dependent on the success and the reusability cadence of Starship. Falcon 9 is the current vehicle they use this year. They've got really good visibility on some of the payload to orbit, densifying the constellation on for Starlink on the actual Falcon 9. But we do think long term it will hinge upon the success of Starship. Right now they do have a very big running start relative to the other competitive set. About 85% of all mass to orbit was enabled by SpaceX over the last 3 years. And operational cadence will be important. These launches this year will be important, and they're making inroads, and they're we'll see on Thursday. But yeah, that will be a big enabler and gating factor for the success over the next couple of years.
Within your $200 price target, how do you sort of break out each business line within that price target?
Yeah, no, it's a great question. So when we look at the next 3-year roadmap, we're really taking a large discount relative to the AI platform. So near term, a lot of our price target is going to hinge upon the success of Starlink, and then some of what they're doing on space with the government contracts and some of the enterprise. Most recently, some of the contracts with the airlines. We do think there is pretty good line of sight here in the near term, and we anchored our valuation on 2029 and actually took a pretty large haircut relative to what the internal plan is. And we're thinking that connectivity is more optionality around the stock and underwriting it on some of the near-term fundamentals versus the long upshot on orbital data center in 2030 and beyond.
Brett, do you model at all for any key man risk with Elon Musk? How do you kind of factor that into how you value the company as much as anything?
Well, that's certainly a consideration, right? He's a visionary. He's very involved in the operations and really across every single segment and division within the organization. All that being said, there is a blueprint that's in place. I'd say the moats they've been able to develop, some of the secular strengths across the business, and really what they have is ownership within the launch capabilities in the U.S. and across the globe. That is the key differentiator as we're thinking about some of the optionality with the other segments down the road. So yes, something always we consider, but he's built something from what was really a vision years ago, over decades ago, and it's a real company with real moats and defensibility in our view.
Brett Lindsay of Mizuho on Bloomberg Tech. Thank you very much indeed. Now, coming up, this space infrastructure startup just found a way to address a bottleneck in scaling quantum computing. Interloon CEO and co-founder Rob Myerson joins us next. This is Bloomberg Tech.
It's time now for Talking Tech. I'm Yahira Anand. First up, Cusp AI, a Bezos-backed British AI startup, has raised $450 million to accelerate the development of next-generation chip materials using AI. The company is also launching the AI Materials Foundry, bringing together more than 48 organizations, including NVIDIA, Meta, Hyundai, to speed up chip innovation. Plus, DeepSeek founder Liang Wenfeng's investment firm fell 16% after China's quant firms were hit with an AI rout. The volatility in Chinese hedge funds highlight the wild swings of AI-related stocks as bubble concerns intensify. And Boeing says it will need until the end of the next decade to bring its next-generation jet to market as it continues to repair its finances for the huge investment. And as customers keep buying its current model. CEO Kelly Ortberg spoke with our own Guy Johnson earlier today at this year's Farnborough Air Show.
The market is not quite ready for the new airplane. The customers are telling us, let's focus on the existing product. We'd like to see better durability of that product in the marketplace. Yep. And as I mentioned, we've got big backlogs, and they're looking for us to deliver on those backlogs. We are studying a new airplane, and we'll be ready when the market's ready.
This startup is tackling a bottleneck facing quantum computing after President Trump made the technology a strategic national priority. Interloon says it's discovered a new way to harvest helium-3, essential to cool the computers and to scale the industry. Joining us now is Interloon CEO and co-founder Rob Myerson. I have to say, when this idea hit my inbox, I was intrigued. Interloon's goal is to harvest helium-3 in industrial quantities from the moon. But in the here and now, there just isn't enough helium-3 for the quantum computing industry on Earth to scale. So you seem to have found a stopgap. What have you done?
Well, that's right, Ed, and thanks for having me. We've devised a technique. Our team has gone back to first principles, cracked the textbooks, and invented a way to separate helium-3 using cryogenic distillation from grade A helium here on Earth. This is an idea that's been around for a while but never pursued commercially. And as far as we know, we're the first to demonstrate the ability to separate helium-3 from commercial grade A helium.
The Bloomberg Tech audience is familiar with the use of helium in cooling and stabilization in the chip industry, for example. And so with the war in Iran and the Strait of Hormuz bottleneck, we came to understand that there was a shortage there. How real was this for you now, Rob? What's your solution looking like on a timeline basis?
Well, so the shortage we're talking about is helium-3, which is an isotope of helium that's extremely rare on Earth. It comes from the decay of tritium, and it's used to chill down superconducting quantum computing chips down to millikelvin temperatures. We've, for decades, secured our helium-3 from tritium decay in the U.S. and overseas, including Canada. But there's not much tritium made anymore, and tritium has a 12.3-year half-life. So it decays to helium-3, and we're just not producing helium-3 anymore. And so Interloon has identified the moon as a target market in the future. The sun produces helium-3, and large quantities. There's over 1 million metric tons of helium-3 on the moon and its lunar regolith. In developing that plan to go to the moon and extract helium-3, we devised this technology we called cold capture to devise to separate helium-3 here on Earth.
So it's the same technique. We are, yes, you heard right, Bloomberg Tech audience, we're talking about harvesting helium-3 from the moon. That's the ultimate goal, right, Rob? But I guess from an economics perspective, that technique, it has a higher yield on the moon. Like get us to the point where this is real.
Yeah, it absolutely will have a higher yield on the moon. We plan with our go-to-market in the early 2030s to produce 10 kilograms of helium-3 on the moon. Here on Earth, by deploying cold capture to grade A helium plants on Earth, we expect to produce about 2.5 kilograms of helium-3 annually. And we have customers that have already signed up to buy helium-3 from us just under $500 million in purchase orders, binding contracts that extend from 2028 out to 7 to 10 years in the future. So we had to find a way to service those customers earlier. And by applying this technology that we've developed for the moon to this Earth application, we're able to do that.
Rob, just very quickly, have you a pathway or a plan in place to get your technology to the moon's surface? Who is the launch provider? Who's going to help you do that operationally?
Well, we have a little bit of time to decide on that, Ed, but we are looking to the Artemis program and the launch companies like SpaceX and Blue Origin, but other companies that are building landers like Firefly, Intuitive Machines, and others. We plan to invest alongside the Artemis program, the NASA program, to go back to the moon and then on to Mars. And we will use that infrastructure that they developed. Now, of course, Ed, the infrastructure we need to harvest large volumes of helium-3 from regolith is infrastructure that also can help NASA build a moon base, build roads, and do construction on the moon that will support large-scale and long-term a lunar economy.
Interloon CEO and co-founder Rob Myerson, thank you very much for your time. Now, coming up, it's been a fascinating weekend in AI, and there is a lot to unpack. Yep, Kimi K3, but also bigger questions about the future of American AI. Mary D'Onofrio, partner at Crosslink Capital, joins us to discuss the next frontier in AI investing. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We're rebounding in the technology sector when it comes to public markets. Remember, chip stocks fell into a bear market Friday, in part because of questions posed by the release of Kimi K3 by China's Moonshot. We're off session highs right now, but the Nasdaq 100 adding almost a percentage point, the SOX up 2%. And it's a lot of the compute names, NVIDIA, but also memory names that are driving some upside in those public markets. Since Moonshot released its Kimi K3 model last week, everyone's debating what it really means. Does more efficient AI mean less hardware? Is China closing the gap faster than we expected? Where does AI's real value ultimately accrue? Joining us now is Crosslink Capital partner Mary D'Onofrio, focused on venture growth investments, but across software, AI, and infrastructure. And for the last 3 days, I've said Kimi K3 many times. But it was interesting to take a sort of straw poll of VCs, founders, people in industry of how they react to it so differently. Some people are very fearful, defensive. Others say this is very good for AI as a whole. Very difficult job first thing on a Monday, but your reaction to what happened?
Well, Kimi K3, as you said, was phenomenal, and it's similar to the DeepSeek moment we had last year. Right. 2.8 trillion parameter model. And what it demonstrates, I think, is that China and open weight models are closing the gap with frontier models. Obviously it was done based on their own benchmarking, but according to the benchmarks,
yes,
they're fourth. And while you can debate the merits of those benchmarks themselves, the productivity gains are tremendous. And I think that in general, it is part of the pathway towards more widespread open weight model usage. And in the context of enterprise budgets ballooning in AI, I actually think that it's probably a boon for AI ubiquity over time.
When you think about your existing portfolio of companies, were you sort of like, okay, how does this impact the trajectory? Has anything actually fundamentally changed for the different pieces of the AI 5-layer cake that you're invested in?
I don't know if it changes the cake itself, but I do think it's another demonstration that models keep leapfrogging one another, and if companies don't out-innovate, they're going to be leapfrogged too. Whether it's every single model seems to outperform the last, and it's a matter of out-innovating by creating moats of data, of performance, of customer resonance, and otherwise, unfortunately. The innovations in both frontier and open weight models is tremendous.
You were on the crossover investment team, but basically focused on private and maybe later stage or venture growth investments. 7 years at Bessemer as well, prior to being at Crosslink. Sort of introduce us to your overall investment focus, your investment thesis.
Yeah, of course. So as you mentioned, I'm a partner at Crosslink Capital. I help to lead the mid-stage venture practice. I spend an asymmetric amount of time in vertical AI and AI infrastructure.
What are some examples of what you call vertical AI and AI infrastructure?
Yeah, of course. So AI infrastructure is a place I spend a lot of time. That's the physical and software systems required to build, train, and run models. And in the first wave, it was about how to build a scalable model. And now we have those, as we're talking about right now. And so in the next wave, it's how to deploy them quickly, fastly, cheaply. Agents, of course, being one of the ways to do so in an efficient way. Taking models as the reasoning layer, adding tools and infrastructure around it to connect to outside data and apps, and using memory in order to do it in a way that produces outcomes. And agent infrastructure itself has become a sector that I've spent a lot of time in, whether it's agent harnesses or the identity layer around it. One of my portfolio companies, Teleport, is a leader in that space, and it's a place that I'm spending an asymmetric amount of time.
I wanted to get to that kind of background on your focus to try and answer some of the questions that the Kimi K3 moment posed. One idea is that basically by lowering the margins at the model layer, it's an enabler. It opens up the market a little bit. It's a driver of demand, essentially. Do you agree with that kind of thinking in response to this?
I do think that it demonstrates what a lot of even the inference infrastructure layer is demonstrating, which is as cost has gone down by 95%, does that displace the total dollar value expended by customers? And I would argue it probably won't, because the migration will just be from workloads that are at the frontier, that are most expensive, and of course that require the most reasoning capabilities and are the most advanced, but they'll go to cheaper models that still provide the same amount, or the requisite amount of compute for the question being posed, but do so at much cheaper cost while not sacrificing on things like latency and performance.
It's interesting because Kimi K3 kind of pricing $3 per input, $15 per output on the token side, it's quite in line with what a lot of leading models are also priced at. I found that interesting. Maybe we should talk a little bit about valuations. It's not a sophisticated argument, but when this all happened, a lot of people came out and said, well, if a $20 billion Chinese startup can do a 2.8 trillion parameter model with these economics, why are we assigning OpenAI and Anthropic a valuation of $1 trillion? They looked at the sort of fundamentals of that. Is that the right way to think about it?
Frankly, I don't know yet, and I don't think anybody knows yet, because even in the context of those questions, Anthropic and OpenAI are still producing billions and billions of revenue, and it's not just from their they have first-party businesses, they have third-party businesses, and I think obviously the API opened for Moonshot, but the open weights have not yet.
Yeah, and 27th of July.
And it's worth noting that because it's open weight doesn't mean it's free to run. And so I think that's a dynamic to these models that people potentially underappreciate as well.
The argument you've just outlined is the same that Greylock's Son Mohammadi made on Friday on the show that these are very robust businesses that have multiple revenue streams. You are focused on the private markets, but we've had some really interesting IPOs of late. Not just SpaceX, but also SK Hynix doing its ADRs. I was in New York City for that. What does that signal to you?
I think it's two things. Obviously, those are fantastic businesses. And I think when it comes to what it says for the markets is that investors are really looking for anything having to do with the AI build-out, AI infrastructure. Obviously, you made the reference to the performance of public market stocks today. But I also think it's one other thing for the capital markets, which is that, we have this narrative that potentially the IPO window is reopening, but is doing so with these long-standing businesses with billions of dollars of revenue that are frankly, older. They're at the cutting edge of innovation, but they've been around for decades. And so I think it's saying, there is a desire for things having to do with AI, but nonetheless, investors are still, they're hardly speculative. Investors are looking for things that are relatively secure.
Crosslink partner Mary D'Onofrio making the debut on Bloomberg Tech. It's really great to have you here, Vanessa. Thank you very much. TSMC is spending at an unprecedented pace, committing a record $265 billion to its US expansion. So with AI fueling enormous capital needs across the chip industry, the question becomes, how will it pay for it? Bloomberg's Stephen Engel, our CFO, Wendell Huang, whether another trip to the bond market could be on the table.
Our fundamental belief is that we should be able to self-sustain using our operating cash flow to support the CAPEX and leave enough free cash flow to return cash to shareholder through a sustainable and steadily increasing cash dividends, which we have been doing that in the past several years. We have very good track record of it. Now, from time to time, we can go out to the market, to the bond market, if the timing is right. We've been doing it. We've done a $30 billion fundraising in bond market a few years back. About half of it in US dollar, half of it in NT. NT is very cheap funding for us. US dollar is becoming more and more expensive. So we'll see if the timing is correct. If the timing is right, we do not rule out that we can go to the bond market again.
Well, given what you just laid out, would maybe a mix of more NT dollar denominated bonds be more likely? Or yields too high?
NT dollar bond market is much shallower than the US dollar bond market. So it has its limitations.
That was TSMC CFO Wendell Huang with Bloomberg's Stephen Engel in Taipei. Now, coming up, Silicon Valley is still betting big on defense. We're going to speak with Andreessen Horowitz, new signing, Connor Love, about the startup shaping the future of national security. Connor just joined the American Dynamism team. That's next. This is Bloomberg Tech. Venture firm Andreessen Horowitz is doubling down on its American Dynamism thesis and practice, adding defense and space investor and former Army captain Connor Love to the team. And Connor joins us now, joining from Lightspeed. It's great to have you on the show.
Thanks for having me.
Day one. You're very welcome. Day one on American Dynamism. Reading about your investments at the last firm and like how you've approached your career, you would call it American exceptionalism, right? But there's a close alignment between those two ideas. Just reflect on what it was that prompted you to join this firm.
Yeah, well, first of all, thanks for having me. We're in a pretty amazing opportunity right now to invest really in the fabric of America. And when Mark and Ben and team kind of approached me, look, this is a category that 4 years ago, they didn't jump on the bandwagon. They said, hey, this is important to the fabric of America. This is important for the entrepreneurs and the technology future for our nation. And when given that opportunity, you kind of have to get on board and join the team. So it's been amazing, so far just to, dive in and get to know everyone. I think in the end, when you take a step back and just look at the opportunity here, as I said before, what's happening is a once-in-a-generation opportunity where we're redefining what it really means to build in America. It's not just software primitives. I mean, it's things that are core to the fabric of America. It's defense technology, it's energy, it's many things. And so to join a team like Andreessen Horowitz and kind of continue to invest in back entrepreneurs in this ecosystem, I'm just really thrilled and excited to be able to do it.
Connor, do you mind if I ask a bit more about the backstory? You mentioned Mark Andreessen, Ben Horowitz, that they approached you. How did this all come together?
It's actually funny. One of the partners and founders of American Dynamism, Catherine Boyle, I actually spoke to her about 7 years ago. I had the privilege of serving in the military and was actually forward deployed in Iraq, looking for what the next opportunity was in my professional career. And I connected with her really in just kind of a haphazard, out of the blue way. And she said, hey, there's this company called Anduril. You should look at Anduril. Obviously, everyone knows what Anduril is these days. But I think importantly, I just got exposed to Silicon Valley. And I saw then what I know now, that really technology will be a force for good. Not just for the defense fabric of our nation, as I mentioned, but also just you can't have an industrial base in America if you don't have a burgeoning defense base. So it's to me a once-in-a-lifetime opportunity that is very much rooted in my background and just happens to connect at 3 in the morning with Catherine Boyle at when she was then at her previous firm.
You've explained it right, that it's not exclusively defense technology. American Dynamism is broader than that. But right now, Anduril is the best-known case study.
Yeah.
Right? Saronic more recently in the news cycle. What is the next phase of American Dynamism, do you think, Connor?
Yeah, well, I put it in that lens, which is you really cannot have a defense industrial base without an industrial base. And when you look into what goes into these autonomous systems, these new platforms, it's really the subcomponents, it's really the parts, it's really the metal and the end components of what's going on. So when I think you take a step back and you look at, hey, obviously defense, we're creating a new opportunity for neoprimes to really capture and serve not just the United States, but also our allies. You see things like energy. You see things like core manufacturing. Importantly, you see things like space. Yes, there's a huge defense component to space, but as we put more kilograms of mass up to space in a lot cheaper way, really it is, kind of the next frontier of where we're going to be building, not just for defense and kind of government use cases, but all other parts of the economy. So I think when I take a step back and I look at American Dynamism, as we call it now, I actually just view it as it's a proxy for how some of the most valuable companies in the world are created. I mean, historically, you look at Boeing, historically, you look at all these companies that have been important to America. They've been very important to the American individual, but they necessarily have not always been the most valuable companies. Technology is changing that. Technology is saying you can be both important to America and our allies and be some of the most valuable companies in the world. And that's what we and myself at Andreessen Horowitz are really excited to invest into.
Anduril is a big focus for the Bloomberg Tech audience. You will have seen the news this morning with Archer finally showing the autonomous VTOL platform. I think what would be interesting is to, you participated in Lightspeed's Anduril investment. Anduril clearly important part of the American Dynamism and A16Z more broadly portfolio. How are you going to approach that?
Yeah. Well, I think I'll say a couple things about Anduril. The first thing is when you think they've got to their last product, you're wrong. There's another product. And I think the beauty is when you have such a complex use case that is the kind of Department of War and the American warfighter, there are a lot of problems that need to be solved. So to see this kind of partnership with Archer, I think is only net good for the American warfighter and the American public. I think when you take a step back and say, really this market is massive. I mean, there are a lot of problems to be solved in the defense space. I mean, there's everything from missiles and what Castillion's doing to ground autonomy systems. I mean, it is really a massively large market where there's actually a ton of technology problems to be solved below it. I think the underlying substrate that I think is important and what we look at, and Andreessen and I've looked at in the past, is really what's happening in defense is this low-cost autonomy thesis that is just, it's playing out in the battlefield. Go look at what Saronic's done in kind of the conflict in Iran. Go look at, the front battlefield of Ukraine. When you can introduce something that is literally 10 times cheaper and as performant and in mass, it really changes the game in terms of deterrence and what you can do for our nation. So I think, again, you take a step back, the market's big, and I think there's going to be a ton of opportunity.
kind of really quick, you mentioned Catherine and Erin, regular contributors to the show, but with you, somebody joined the team that is a veteran. Just in the 30 seconds we have, would you reflect on that a little bit, the skill set and experience you bring?
Yeah, I mean, there are more impressive people that have done some pretty amazing things for our country that I want to put in front of me. I do think, though, that time of service really just grounds me in why we are doing this. Like I said at the start, importantly, this is a category where you're not just doing good economically, but I do believe you're doing good for the world and for the American public. So having worn that uniform puts me in a position just to take a step back and say, hey, this means a lot, not just for our shareholders and for everyone backing Andreessen, but also for America. So I'm deeply thankful, and I'm going to keep doing it for decades.
Connor Love, now on the American Dynamism team at A16Z. Great to have you on the show. Thank you very much indeed. Now, coming up, Alphabet, Tesla, Intel, and more. Posting earnings this week. We're going to look ahead. We're going to discuss what to expect. This is Bloomberg Tech. Okay, tech earnings kicking off, and we're expecting some big names this week, including Alphabet, Tesla, and Intel. Investors will be looking for proof that billions in AI spending are starting to pay off, even as cheaper AI models from China have raised some questions. Bloomberg Intelligence senior analyst Mandeep Singh joins us on what to expect. And, it's been so interesting to read the team's research. There will be short-term a focus on CapEx, but I think looking past that, what is it that you want to see? What's the data point that shows this AI thing's real?
I mean, cloud revenue is still the key metric when it comes to hyperscalers who are at the forefront of CapEx, and everyone is expecting those CapEx numbers to go up. I mean, the question is next year going to be 30 to 40%, or we are going to have another year of 50% plus increase in CapEx? I mean, to my mind, the numbers are getting very big in terms of $1 trillion in annualized CapEx from the hyperscalers. So there is a limit to how far they can go, but clearly, 2027 numbers will be higher, and we are expecting positive upward revisions justified by accelerating cloud growth from these hyperscalers.
Let's stick with the Google parent as the case study. Overall revenue growth is expected to be about 20%, but Google Cloud, I think 65% year-on-year growth. That's the story, right? That Google Cloud is where the traction with AI shows up.
Yeah, no, you're absolutely right. And that's where, the comparisons would be drawn to Azure, and the fact that Google Cloud is growing at least 15% points faster than Azure. And AWS, things seem to be picking up, and now OpenAI is deploying on Amazon AWS as well as Azure. So the impact of that on Microsoft, that's going to be front and center. But there's no doubt that cloud infrastructure is where the monetization will be evident. And look, all the frontier labs are monetizing tokens, but you're not going to be able to glean that from the earnings of companies. It's too early to see that token monetization being visible.
This is what the week looks like. All kicks off Wednesday. Alphabet and Tesla. IBM, of course, pre-released, but maybe we'll learn a bit more than Intel on Thursday. Bloomberg Intelligence senior analyst Mandeep Singh, thank you very much indeed. A busy week for Mandeep too. As we head out, let's take a look at today's big number, $264.1 million. That's how much The Odyssey, the new movie from blockbuster director Christopher Nolan, took in sales globally in its opening weekend. It was the #1 film in the US and Canada over the weekend, with $124.5 million in ticket sales in North America, a large portion of which was generated from screenings in IMAX's giant auditoriums. Many of them were sold out many months in advance. I'm still yet to see it. That does it for this edition of Bloomberg Tech. A really big focus still on Moonshot's Kimi K3 model, 2.8 trillion parameters, and a lot of questions posed for the world, for AI, for markets, for investors. We got through all of that in the program, so recap it on the podcast. You know where to find it, on the Bloomberg terminal. As one audience member reminded me, we call it the Bloomie, but it's online too. Have a great week. This is Bloomberg Tech.